And as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. Monetary policy around the world is unhinged. It's completely subject to different human theories about how monetary policy should work. It's, you've got the monetarist school, the Keynesian school, the Austrian / supply side school. But then you have on the other side of it, it's not just monetary policy, it is politics that influences monetary policy around the world. So it's not independent around the world, maybe a little more so in the United States than in other places. But I just think pure politics is much more of an influence than many people appreciate.
Prepare yourself for an informative journey into the fascinating realm of Bitcoin, guided by none other than Cathie Wood. Fast forward to 2030 to see how Wood's insightful prediction of a tremendous rise in Bitcoin's value, which might reach an astounding $1 million per coin, comes to pass. Why does Cathie Wood think that Bitcoin will succeed so much? It all comes down to her belief that governments all over the globe are producing money at previously unheard of quantities as a result of an unanticipated reverse in global monetary policy. This has set off a chain reaction that has caused the currency to depreciate and an uncontrollably spiraling inflationary cycle. Not only that, but a breakthrough that will change the game is approaching. With the US government's recent acceptance of Bitcoin ETFs, the cryptocurrency has gained institutional players' credibility in addition to approval. Get ready for a massive influx of institutional cash into Bitcoin as a result of these recently authorized ETFs. The fact that these institutional investors are in it for the long run and want to become essential long-term holders in the rapidly growing Bitcoin ecosystem only serves to heighten the suspense around this influx of capital. Join us as we explore this video to get a thorough explanation of Cathie Wood's reasoning for her bold $1 million Bitcoin price prediction. As we mutually explore the fascinating panorama of Bitcoin's future, you won't want to miss the insights she reveals. Let's get started.
I first describe what it is, and I ask them to listen very carefully to each of the words that I'm saying. It is the first global, private, meaning no government intervention, rules-based, if I didn't say digital, I should say it now, digital monetary system that the world has ever known. It is a very big idea. And in fact, what I often do is describe what Art Laffer said to me after he finished reading the paper. And, he basically said, I think I might have mentioned it, I've been waiting for this since they closed the gold window. Monetary policy has been completely unhinged. There's no discipline. We're going through booms and busts that are completely unnecessary. And I did say to him, I said, if we went back to a private money, and I'll get back to how we help people understand this. He's very excited about a private money, but in studying the history of private money in the United States prior to the Fed, 1913, I said, but Art, that was a period of booms and busts. And he said, yes, but they happened very quickly. What we're doing with monetary policy right now, they happened quickly back then without a terrible amount of damage. What we do these days is plug the dikes and make one monetary mistake after another, and we end up in a global, massive crisis that takes years to get over. So that was interesting. And I did say at the time, I said, well, Art, if this is such a big idea, how big is it? And he said, well, how big is the U.S. monetary base, the reserve currency's monetary base? Back then it was $4.5 trillion. Today it's $8 trillion. He said, there's your answer. There's your answer of how big this could be if this is going to become an effective global monetary system. And so we ran with it, and we have not stopped running, because you're right, we have just begun. And it is interesting to note, we're up to 19 million Bitcoin, and we're going to 21 million. So the scarcity value argument, the store of value, is going to resonate even more, because I believe when the SEC does relent, and it will, now that Chairman Gary Gensler is calling, the controversy around the Bitcoin ETF his personal Vietnam. So he probably wants to get rid of it. Our COO, Tom Stout, feels that we will have, not we, maybe many people, many firms will be approved for a Bitcoin ETF. And when that happens, that will bring with it an institutional acceptance that really could highlight the scarcity value of Bitcoin. And institutions are not the only story. Thank you for reading our Big Ideas 2023, and in there you see our building blocks to a $600,000 to $650,000 price, and perhaps $1 to $1.5 million price by 2030. We think most people in the world, at the very least, should have some of their assets in Bitcoin as an insurance policy against confiscation of wealth. And that can happen in a number of ways. It can happen outright. So to see MBS in Saudi Arabia lock his cousins up in the Ritz Hotel and just take their wealth, that's confiscation. That's outright confiscation. And then, of course, there's inflation, which is also confiscation of wealth. It's a cruel tax. It's very regressive. And Bitcoin would be an important hedge against that for anyone, but especially for lower income people.
Cathie Wood talked about the possibilities of a disruptive worldwide private digital currency. Calling it the largest of its type without government interference, she emphasized its significance. She highlighted the necessity for a new system because of the existing instability brought on by insane monetary policies, referring to Art Laffer's excitement. In an attempt to provide greater stability, Cathie made a comparison between the current state of affairs with the booms and busts that occurred before to the Federal Reserve. She brought up the system's possible effects by pointing out how much it has grown in relation to the U.S. monetary base. The topic of Bitcoin was also discussed, and Cathie Wood predicted that it would gain more traction if an ETF with SEC approval were to be introduced. She underlined the uniqueness of Bitcoin and its function as a safeguard against the confiscation of wealth through inflation or other means. Cathie said it could be a good idea to own some Bitcoin assets, particularly for those with lower incomes. Lastly, she mentioned her firm's price predictions for Bitcoin, forecasting values of up to $650,000 by 2023 and the possibility of reaching $1.5 million by 2030. In addition, Wood hinted at more insights to come, leaving room for anticipation and further details on her perspectives.
But I think the institutional allocation to Bitcoin in the base case, I know at one point we said 2.5%, that may have gone down a little, but if we're right, that assumption alone, I have been in the markets for a long time, and as new asset classes evolve, what institutions do in particular is they tiptoe in. They start with 1%, and then they migrate to 2%, and then they migrate to 5%. So I think in this one, it's 2.5% for the base case. When there's a new asset class, it tends to end up in the 5 to 6% range. This happened to real estate. It happened to private equity, venture capital, which is now much more than 6% in many institutional funds. It happened to the whole category of emerging markets. And so I think it's that one alone is very conservative. And if you look at another one, the corporate balance sheets, Tesla, Square have Bitcoin on the balance sheets, but we make very cautious assumptions. And I think the corporate treasury assumption is 2.5% of all cash and cash equivalents in Bitcoin, and the bull case is 5%. If we're right and the purchasing power of Bitcoin becomes so obvious in the years ahead, meaning the purchasing power goes up instead of cash, dollars, staying pretty flat, if not in real terms deteriorating, then more and more corporate treasuries are going to be putting Bitcoin on their balance sheets. And in fact, they'll be, the analysts will start questioning them. Why do you have, 95% of your cash in a depreciating asset when you could put it into a cash equivalent like Bitcoin and have an appreciating asset? So remittances is another very big market. We assume 10% of remittances in the base case and 25%, instantaneous, no fees or minimal fees compared to 8% fees as migrants send back to their home countries. Sovereign treasuries, 1%, only 1% in the base case, 5% in the bull. Just like corporate treasuries, they'll be under pressure to start increasing their exposure to Bitcoin. And emerging markets, not just the state treasuries, but all of the populations who are subject to these swings in their currencies and absolute demolition of their wealth when they go through hyperinflations. We assume 3% of the populations in the emerging markets, 3% of their assets in the base case go to Bitcoin and 10% in the bull. So those are some of the cases. And then there's the other utility economic settlement network case, and that's 5% of all settlements in the base case and 10% in the bull case. So that gives you a sense of how we have built those two estimates. And those are pretty conservative assumptions, we would suggest.
In her discussion of institutional Bitcoin allocations, Cathie Wood pointed out that new asset classes usually follow a certain pattern. Citing past trends in which new asset classes eventually reach 5-6%, she recommended a cautious 2.5% allocation in the base scenario. She made comparisons between how institutional portfolios of real estate, venture capital, private equity, and developing markets have changed over time. In addition, Catherine Wood discussed business balance sheets, stating that a conservative estimate of 2.5% of cash and cash equivalents should be dedicated to Bitcoin, with a bull case of 5%. Her focus was on the possibility that more businesses will view Bitcoin as a desirable asset if its purchasing power surpasses that of conventional currencies. Cathie also looked at the money transfer sector, estimating a 10% base case and a 25% bull case allocation to Bitcoin. She talked about the possibility that, like corporate treasuries, sovereign treasuries might come under pressure to expand their exposure to Bitcoin in both base and bull situations. Proposing a base scenario of 3% of the population's assets in Bitcoin, increasing to 10% in the bull case, the conversation then moved to emerging markets. Cathie Wood emphasized how Bitcoin could be able to guard against currency depreciation in times of hyperinflation. Lastly, Wood discussed the potential of Bitcoin as an economic settlement network, estimating that it would be used in 10% of settlements in a bull market and 5% in a base scenario. She pointed out that these figures were early and suggested that there may be a bigger real impact of Bitcoin on institutional investments.